testing. Are we live? Let's see. We should be live. Good morning. Testing. Testing. We will begin shortly, guys. And just fix some of the audio settings. I am not at my desk. Testing. Let me know if I start cutting out. They have the noise gate and noise suppressor setting on. Is there some background noise? So let me know if everything's good. I don't cut out. The music in the back is about, I think we're solid. So get started in a few here, in like 5 minutes. Let people come in. Let me make a final announcement on Instagram, and we'll get started. What's up, Purple? What's up? I don't want to say. What's up, brother? All right, sweet. We sound good. Excellent. What's up, Dennis? How was your guys' week last week? Talk to me. Made the announcement on Instagram. Thanks for your patience, guys. We'll begin shortly. What's up, Gupta? You determine your bias once from the monthly, weekly, daily, and then stick to it for the entire month. That can be subject to change. I do this every single week. I may have a bias in the month, but that can't, as price tells us, gives us more story, and price is always constantly work with. So we must be able to react and adapt to the new stubborn to beginning of the month. If something changes middle of the month or into the month, for example, a random news event that really tanks the market, something unforeseen, well, now we have to switch our bias, right? Things can always change. Or if our idea doesn't start panning out month, we can. Oh, the sound is cutting in and out. All right, that's what I was worried about with filter. Might not be talking loud. All right, let me change some of the property on the mic because I'm not using my typical setup. So one moment. Testing. All right, I think this should be better. I turned the noise gate off. Let's just hope it's get some peace and quiet in the background. All right, yeah, appreciate you letting me know, Gibbs. All right, so let's just get started then. We have a solid amount of people trickled in now. Let me pull up the economic news calendar and we'll begin. We're going to be taking a look at this list right here, the forecast list. I have added YM. We did this together last week. We have added YM. Since I now do look at YM when I'm intraday trading, that is something I added recently. And looking at it specifically for SMT, not to actually trade YM, I still try to focus whenever trading indices to have executions on the NASDAQ even. I prefer NASDAQ over ES even, as NASDAQ tends to move better, more aggressively, it's more volatile. ES tends to be a bit slower and not as aggressive. So I've been prioritizing NASDAQ executions over all these other, over the indices. But I have added YM specifically to look at SMT in between these, because I've noticed it does work very well, and it does tip its hand to a lot of great setups. So yes, that is why I added that. And I also added Ethereum, not because I trade Ethereum, but I think it's good to see it because these two do have correlation. And if we're going to be looking at SMT, we would need to see Ethereum if we're looking at Bitcoin. So I have added that right here, just for those who do look at it, just to get a better overall view of some of the markets over here. All right, so let me get the calendar. All right, guys, here's the calendar. And before we begin, I just want to make a announcement in case you haven't heard. The indicators right here, you see me use them every single day, every single forecast, every single trade I'm using them in. They're always on my charts. You can now try them for literally just $1. New promo. You can literally just try them for $1 for whole 7 days and see if they work for you. See if you fall in love with them. I think you will. I think they're extremely useful. There's absolutely nothing like these on out there. And I say give it a shot. I think it's a no-brainer. It's basically free, and you can try everything out for literally $1 for 7 days. You get access to all of them. You get access to the entire course we built for them. You can take a look at the Discord bot that's included, private channel that's included. There's a lot of resources in there for $1. I think you will learn a lot by just going through that course. I think you can learn a lot in the 7 days you have access to. You can go through it, you can finish it, and you can get a whole lot out of it. Even if you decide not to continue, I think you will find a lot of value in the course that Nils and I built over there, and the indicators that we built here. I think there's a lot of value. Right? Again, and if you don't want to continue after the full week is over, I think it is a very valuable thing that you might want to look into. I think there's a lot of gems in there. That being said, let's get into the good stuff here. Hopefully the sound is all right and we are solid, so let's do it. Again, thanks for tuning in. For those of you who are in different time zones, I know this is later than I usually do it. I was quite busy this morning. More so I just slept in because I went to the weekend concert last night, and I stood awake pretty late last night, so I had to sleep in and get some rest. So here we are again. Thanks for tuning in late. All right, anyways, let's get into it. So here is the economic news calendar. This is the first thing we should be looking at every single week. I already broke this down on Instagram, by the way. I think that breakdown is very well in depth. We're going to do that just real quick and briefly over here as well, in case you did not see that and don't see my Instagram post. But the economic news calendar is the first thing we should look at. It is our roadmap for the week. News is what injects volatility and energy into the marketplace. So we want to understand where the news and energy for the certain week that we're trading is going to be located in. And that is why we look at the economic news calendar first thing every single week. This is step one. When you're approaching a new week, this is step one. So we take a look at this week's calendar, the way it's laid out. We have Monday with no news. You know how I feel about newsless Mondays. Low probability in general. There is no volatility injector for that day. Typically, newsless Mondays like to consolidate and just present lower probability price action. So I tend to be very careful on them and avoid them entirely. I'll still show up, see if something nice potentially sets up, specifically on indices, because we know indices has that daily 9:30 open volatility driver that can potentially present something. But just don't get your hopes up too much. Don't have high expectations. Calm those expectations down and don't force anything. Essentially, it's a long week ahead, and in all honesty, the way this calendar is set up, the expectation for high probability price action to kick in is going to be in the latter half of the week once we finally get our first US dollar injector. I'm specifically talking for us USD dollar traders and indices traders. It would be in the latter half of the week where we finally get our first injector over here. And then going into Thursday, we have a bunch of USD dollar news, and Friday as well. We have more volatility right there with Powell speaking. So I would say for this week, the way it's laid out, careful in the early stages of the week if you're a USD based trader. If you trade the majors, indices, it may not ramp up until the later half of the week. So that is something to keep in mind. But on Tuesday, we do have CAD CPI, we do have NZD CPI. So if you trade forex, if you intraday trade those, you can potentially look for a nice intraday setup inside of a kill zone, as we have plenty of injections, specifically for CAD news as well, and NZD right here. This could be nice in the Asia session, actually. If you trade the NZD pairs, Asia session might inject something nice flowing into potentially London session, could also present something interesting. Personally, NZD though is not my favorite currency, so for me this isn't really that much of a big deal. But if you do, if you live on the wild side and you like to trade New Zealand, intraday New Zealand dollar pairs, there you go. That's something to aid in that being a high probability setup potentially. Wednesday, GBP CPI over here at 2 in the morning. That could be pretty nice for London intraday trades if you trade the pound. And again, like I mentioned, we have USD FOMC meeting minutes. This right here, I mentioned it on a tweet today and in the Instagram reel. It is not the same as FOMC statement. I know a lot of people still get that misunderstood and they think it's the same exact thing and they should be scared of this event. No, it's not the same thing as the big three news that we all know: FOMC, CPI, NFP. It is not the same. It's different. It's not nearly as volatile, and I honestly will be fine trading prior to that. It's not something I expect to have all the sessions prior be in this super choppiness like we see on FOMC statement days. It's different, so I tend to not really factor that in as something like, uh-oh, watch out guys. No, I'll still trade fine that day. So they're not the same. FOMC statement is different than meeting minutes. Remember, FOMC statement is a two-stage news event with 2 p.m. typically being like a manipulation phase, and then 2:30 being the actual expansion. In case you didn't know, you can view FOMC as that. It's a two-stage event. 2 p.m. typically manipulates, and then 2:30 p.m. is that second injection of volatility that tends to expand us towards where we were initially going to go. So anyways, that's not what we're going to be doing this week, but thought it was interesting to mention since we're already on the topic of FOMC. But yeah, no, it's not the same. Anyways, moving along here. Thursday, we have Euro red folder news at 3:30 a.m., 4:30 a.m. pound news. And we have some nice juicy US dollar news right here at 8:30 a.m. and some more news at 9:45 a.m. Quick word on this, actually. I mentioned this last week. I don't believe everyone's too well aware of this. I personally haven't spoken about it too much on the forecast, but when we're talking about indices and the kill zones I trade indices in specifically, I utilize, you've heard me say, 8:30 a.m. to 12. Now, what you may not realize is that is very dependent on if there is red folder news on the day or if there is not. If there is not, for example, let's say you're looking to trade on Tuesday and there's no red folder news on the day. If there is no 8:30 a.m. news driver, my kill zone shifts up to 9:30. So I will start looking for trades after the 9:30 open. So I'm waiting for that 9:30 open to inject the volatility because that's always a guaranteed volatility injector. So my kill zone shifts from 9:30 to 12. On no news days, it's 9:30 to 12. On 8:30 a.m. news days, 8:30 is the injector. So I trade 8:30 to 12. There might be setups after that volatility injector, and I can trade the period from 8:30 to 9:30, if that makes sense, right? It just shifts a little earlier because we have that volatility injector already at 8:30 a.m. prior to the open. There's a lot of setups that can happen right there just with that. If that decides to manipulate us, and after that manipulation, we can potentially see some sort of reversal. We can play up until the open, and then the open is just a continuation of that move right here that we saw the manipulation. For example, 8:30 news event drops us into a higher time frame POI, manipulates us lower. We get a reversal, we can play that and then expect 9:30 to be a potential continuation. Okay, so in case you didn't know that, that is how I utilize the 8:30 and 9:30 open right there when I am determining when I'm waiting for the open or when I'm trading prior to it. Like for example, on Thursday, we have 8:30 a.m. news. All right, if 8:30 a.m. news does something interesting and manipulates us into, for example, like a 1 hour for value gap, boom, 8:30 a.m. manipulates us lower. From here, we start to get some sort of reversal. Say we get a 5-minute impulse shift or something like that. That's valid for me. I'll trade that prior to the 9:30 open and then look for the 9:30 open to potentially expand us and send us higher. Or this, if 8:30 a.m. does nothing, 9:30 a.m. might be the manipulation, then 9:45 a.m. might just be a continuation of that 9:30. Or if 8:30 and 9:30 for whatever reason don't do anything, 9:45 a.m. might be the manipulation, and then we reverse off of that. There's a lot of scenarios that can happen right there, but you just want to be waiting for that, if that makes sense, for the volatility drivers to be there. Otherwise, if there's no volatility driver, just wait until 9:30 a.m. All right, so enough on that. I can think about making a video on that actually later down the line. Moving on to Friday, we have 10 a.m. red folder news on. We got Fed Chair Powell speaking right here. Now, I tend to err on the side of caution when he speaks, as price tends to do a lot of funky things. So I prefer not to be in any positions until like he's literally off the podium and not on camera anymore. Because you never know what he's gonna say. Really, it messes with price a lot. So I tend to err on the side of caution and not even being in a position while he is speaking. That is how I approach that. So I am cautious on here. And if there's anything after, I will be interested in. If we can catch anything just prior, I will be interested in potentially taking that. But honestly, if we have a good week early on, we catch some trades, are up nicely on Wednesday and Thursday. We had a great week. I would probably not even trade Friday entirely and deal with this guy right here. Okay, so that is how I tend to approach that. Just be very careful when he's speaking, is the main idea there. That being said, let's move along. Let's move along here and take a look at our first asset, the dollar. As always, we always want to look at the dollar. It is the world reserve currency, and it simplifies a whole lot for us, right? By just looking at the dollar and finding a clear bias on the dollar, we will find a clear bias for all these assets right here, all these majors. Okay, because they move alongside, they move in tandem with dollar. They are literally connected to the dollar, here, as you can see. So we always look at the dollar first, and we do our top-down analysis from the highest time frame, which I use as the monthly, and we move our way down to the weekly, daily, and 4 hour. And again, the first step in a top-down analysis is finding bias. How do we find bias? Well, we use that using two concepts, order flow and candlestick logic. Order flow is reading the fair value gaps. Where are they pointing? Have we been respecting discount arrays? Have we been disrespecting them? Or have we been respecting premium arrays and disrespecting discount arrays? Are we bullish or are we bearish? That all comes from reading order flow and candlestick logic. What are the individual candles doing? Are they respecting or disrespecting discount arrays or premium arrays? Again, I have a whole video on that, specifically on candlestick logic, if you don't know what that is. But I promise you, it's a very simple concept right here. It's very simple. So over here, let's take a look and try to find the bias on the dollar using everything I just mentioned. So I'm going to clear everything up, start from scratch, except, I'm obviously going to leave my order flow indicator up here, which automatically will mark out the order flow on all the time frames automatically simultaneously. This is why I love that. It saves me so much time, and especially what it really does a good job of is, I don't know if this might even be a good example, but it'll show you if there is a higher time frame fair value gap created above you. So recently I had a thread on magnet theory, and that's a huge concept because a lot of the times before I ever knew what magnet theory was and incorporated that into my analysis, I would take so many losing trades because I would not remember to look at the higher time frame above me and notice what fair value gaps are being created on the higher time frames above me. That question in itself is something you have to ask yourself constantly. That is really huge when you are analyzing what fair value gaps are being created on the time frame above the one I'm currently looking at, because a lot of us can get laser focused on just one time frame that we're looking at, and then we forget, what if there's a higher time frame for value gap right here? Well, now that might act as a draw, make all these low probability gaps, make all these gaps low probability, and then you start taking unnecessary losses because you're still continuing to short or whatever when there's a higher time frame level behind. And if you just notice that, we're patient for that, waited for price to come up here, caught the reversal off of this level, then you would have been in the clear and you would have avoided a lot of low probability losses. That happened to me a lot, and I know it happens to a lot of people out there still because they don't know what ever look at the higher time frame above them. So that being said, that's why I love this indicator, because that's literally impossible with it. You're going to be knowing exactly what's happening on all time frames all at once with the order flow. All right. That being said, let's start from the monthly. On the monthly, we have bearish order flow. Fair value gets pointing down. We're currently in this bearish order flow leg. Now, what's happening on a candlestick logic basis, that is, remember, analyzing individual candles right here. We are currently respecting and sweeping previous month's high. Previous month's high, previous week's high, previous day's high are very important premium and discount arrays to always keep an eye on and see how is price reacting at those levels. They are valid PD arrays, just like a fair value gap is, just like an order block is, just like a swing high or swing low is. Your previous months, previous weeks, and previous days highs and lows are PD arrays you want to be paying attention to and seeing how is price reacting at those levels. They're not something you just ignore. They are valid PD arrays. So that's why we're looking at this and being, okay, previous month's high is currently being respected. That is a premium array being respected. So what I'm going to do now is I'm going to move down into the lower time frames and take a look. Okay, in order to confirm that and actually create a trade idea to look for lower prices, I want to be looking for order flow. So what does this happen? We're going back to order flow. What you're going to notice in the way I view charts is that order flow is at the absolute core of everything I do. It all leads back to order flow. It all leads back to the fair value gaps. The fair value gaps are going to tell you the entire story of price. So that's what we're doing here. On the monthly, we're starting with candlestick logic. That is the most current price action that we're looking at right here, and that's the current story being told. So now I'm going to go down to the weekly, see what the weekly is telling me. Is there any fair value gaps right there? Is there anything else that candlestick logic is telling us? And we're just going to start looking for a narrative PD array. If we are going lower, where are we going lower from? If we are going to go lower off of this previous month's high sweep towards this previous month's low, which is the only premium array, which is the only discount array that we can potentially draw towards to. There's nothing else here that we could potentially draw towards to if we're going lower other than this previous month's low. So currently, this becomes a potential draw. Let's go to the weekly. Is there anything else that tells us that we can trade maybe a weekly fair value gap down into there, or maybe anything on a candlestick logic basis that tells us we are still bearish? I don't see a weekly fair value gap, so we don't have a narrative PD array just yet, but the weekly is confirming bearish prices as well. So this is that previous month's high sweep. It doesn't really align nice. It doesn't really look clean on the weekly, I know, but that is still considered a previous month's high sweep. On a weekly basis, we are sweeping this weekly sell side right here. Very large reaction right here. Very large upper wick. This on a lower time frame is likely bearish order flow pointing lower. That's great. On a weekly basis over here, we are again implementing candlestick logic. What happened? We swept previous week's high right here. We're expecting a premium array. We're respecting a premium array, and now closing below previous week's low. Disrespecting a discount array. So that's all bearish arguments so far. Respecting premium, disrespecting discount. And this is all just utilizing candlestick logic right here. Okay? So far, full bearish arguments. Okay, so where can we potentially draw towards to next? Well, on a weekly basis, we have this weekly swing low. That would be the close proximity PD array that we can target, right? And that's all we're doing pretty much when we're doing our top-down analysis. We're always looking for the close proximity PD arrays we can target, and we're just stacking arguments, trying to find the most likely direction. And so far, you've seen from the monthly down to the weekly, we have pretty much only created bearish arguments right here. And I'm just marking out the closest PD arrays that we can draw towards to based on those arguments. So I have this weekly swing, and we have this monthly previous month's low right here. So these are my two targets right now so far from a monthly and weekly. But we still don't have a narrative array. We still don't have a fair value gap. If we're going lower, where from? We don't have a level that we can be like, all right, this is my context area. So let's go down to the daily. And as we do get down to the daily, starts to look a bit choppier. And dollar has been a bit choppy the last few weeks over here. This is not the nicest trend, right? Nice trends happen when we create fair value gaps and we create expansions. This is a pretty choppy trend, so it is 1000% harder to trade right here. This is all chop right here. There's no daily fair value gap, but we have created bearish daily order flow. Remember that large wick I pointed at on the weekly? Higher time frame wicks are always going to be lower time frame bearish order flow. And that is what the daily is showing right here. That large weekly wick is just order flow shifting on the daily. So we have daily bearish order flow. We just sweep this liquidity right here. This is a stop line. We disrespected the daily, but we seek the last line of defense is what you would call that. This swing high right here that created this bearish leg. And this is just a stop line. Big bearish wick right there. That is likely 4-hour fair value gaps on the lower time frame. Ooh, this was actually that nasty glitch that we saw the other day. It's not across all brokers. But yeah, here's that 4-hour fair value gap right here. We are still in 4-hour bearish order flow. It is quite choppy right here though. But if we go to the 4-hour, just taking a look at the most recent order flow, we are seeing bearish 4-hour order flow right here. So if we do want to push lower, what I would want to see right here is price respect, because we already offered fair value here on the 4-hour fair value gap. I would want to see it just continue expanding lower. I won't look to trade in here. I would just like to see a new 4-hour leg lower, ideally sweeping that previous day's low, creating a fair value area. So what I'm telling you guys right here is this would be my ideal scenario in order to look for potential shorts tomorrow, shorts on this week on the dollar. I would want to see a 4-hour fair value gap lower after respecting this leg, create a fair value area, retracing up into that down towards these lows would be ideal. But I do have a bearish outlook on dollar. I mean, all signs, all compasses across the time frames are pointing south. There is absolutely zero bullish arguments for this right now. I would just like to see these 4-hour fair value gaps follow through and start drawing towards these levels right here. Bearish outlook on dollar. I hope you guys saw how we can do that very simply by just using two concepts: order flow and candlestick logic, and literally just looking at these 4 time frames right here. That's all we're doing on the forecast. We're just looking at 4 time frames: monthly, weekly, daily, 4-hour. These are what I consider the higher time frames, and this is where I'm doing the bulk of my analysis and the bulk of the chart work on the forecast. The hard work, if you can, it's not really hard work, but the effort should be coming in on the higher time frame analysis. The entry is the easiest part, guys. It's the easiest part. This is where the majority of the brain has to be used. So yeah, bearish outlook on the dollar right here. Just looking for weekly swing low, previous month's low right there. That's the indicator marking that out automatically for me, the navigator indicator. Again, you can try this for just $1. It's just $1 and see if you enjoy it. I think you will. I have this shit on 24 hours a day. I love it. It saves me so much time, so much brain points. I don't have to do all that manually. I think it's excellent. So yeah, the link is in the description if you do want to take a look at that. Moving along, so we're going to go into the majors right here. Bearish outlook on dollar. So that means, very simply, I'm going to have a bullish outlook on the majors right here. Specifically the USD quote currencies. When in the end right here, they move opposite of dollar. This, the USD in the base currency, so the base is the first pair listed in a forex pair, they move alongside dollar. So they'll move in the same direction, pretty much. Although I'm not seeing anything very clear, so I already know that just by just those 3 seconds of analyzing this, I already know I'm not going to be interested in these this week. But we'll get to those. So now if I'm bearish on dollar, I'm looking for bullish on euro and GBP, simply put. And the analysis is going to be very similar. We're sweeping previous month's low right here. Again, same exact thing. We're just inversing it on a weekly basis. On a weekly basis, it's actually quite interesting because this is what we determined last week to just be weekly pivot context. Like, just an extremely textbook case of weekly pivot context. If you don't know what that is my latest YouTube video. Just take a look at that. We walk through all that. Very simple. It's nothing complicated. But this is nice weekly pivot context, is sweeping this swing low that was created inside this weekly fair value gap since we failed to expand higher. If we're going to continue pushing higher, it would happen off this swing low that was formed and left inside of the fair value gap. So that's what's currently happening here. Let's go to the daily, and we'll notice that again, it's not the cleanest trend like on the dollar, but we are still trending higher. So what I would look for here, go to the 4 hours. So there's nothing on the daily, no daily fair value gaps. We are in 4-hour bullish order flow. I would just want to see 4-hour fair value gaps displacing higher through that. I do think we're drawing towards this previous week's high, previous day's high right now, but I'd rather just wait until we displace above that. Then we'll pretty much have clear skies to this high and then previous month high. I don't think we retrace all the way down here. I think we're too close to our drawn liquidity to see a retracement. These are 4-hour breakaway gaps, so again, I wouldn't want to see them. I want to see them remain open. But I think we're already going to reach for these quite soon here. I would just want to see new expansions higher. That could be interesting. But that is dollar. It's that is the euro. Sorry, just bullish. I think there's no bearish case for it to be made right here. Daily bullish order flow, daily confirmed order flow right here. So this is not looking too bad. This is an order block right here, by the way. If you're seeing this, yes, this is an order block. For me, I like my order blocks to have fair value gaps in the leg. So for me, it's not something I'd be looking at as potential context. I know some people do that. Personally, I wait for the fair value gap. So an order block that I would look at would be something like this. Then at this point, this really just becomes a fair value area. This right here. So this is what I would look at, the type of order block, type of down close candle I'd use. I think that looks, I mean, it was beautiful. I mean, look at the respect right here. Gorgeous respect to the fair value area. But yeah, I like to see fair value gaps in the same leg as order blocks in order for me to consider them high probability. Right? The fair value gaps make all the other PD arrays high probability. Just like we look at breakers, right? With breakers, unicorns demand a fair value gap to be a unicorn. Otherwise, it's just a breaker. And a breaker by itself is not as high probability as a breaker with a fair value gap. So why even look at breakers without fair value? Just focus on breakers with fair value gaps and just maximize your probabilities. If that's our whole goal as traders, that's what we should be striving for, right? So that's euro. GU actually looks a bit stronger. As you can see, it's a stronger trend, whereas this is more of a choppier trend, more aggressive retracements here. GU doesn't have any of those more aggressive retracements. It's very clearly, this is just using an eye test, very clearly stronger right here. GU has this daily fair value gap down below. We can draw into that. I wouldn't consider this a breakaway gap any longer because we have just respected a premium array, and that premium array might give us the catalyst to actually retrace into that. So this is not something I would consider a bag anymore. It wouldn't be surprising if we do retrace into that. So that can be interesting. That is a level I will be keeping an eye on that daily fair value gap down there. What's the 4 hour doing? I think the 4 hour is looking quite choppy. I'm not really a fan of where it's at right now. And we're still in this 4 hour fair value gap right here. We can reject and move lower, but we have 4 hour bullish fair value gaps. Not really a fan of what's happening right here. I would wait. Either we retrace into this daily fair value gap, or we just displace above these highs, previous week's high, like we looked at in dollar, and just look to use this as a new 4 hour area of fair value and get new fair value gaps through that. That would be interesting. It is looking stronger, but again, it'll depend on what dollar wants to do here. Does it want to do that and move lower? We will have to see. Because I don't think dollar would need to sweep this swing high again. Although, I mean, it could. Just doesn't really look like it's likely on this next daily to go up higher to then go lower, which would make euro go lower and again go higher. I mean, it would have to happen that way. I mean, if dollar doesn't want to do that. Anyways, again, we're just going to react into that, to what happens. Anything can happen. But just based on what this daily candle looks like, already wants to expand lower. I would think also based on this 4 hour order flow, already looking bearish, already offering fair value right here to just continue expanding lower. So that is what I think. I think we already just moved lower on the dollar, meaning we may just already move higher right here. And then this is the easy part of the forecast. If you've been keeping up the last few weeks, watching all the forecasts, you've noticed that I haven't talked about AU, NU, UCAD, USD CHF, USD JPY. They just haven't been interesting in so long. They've been super chopped. Take a look at the weekly. It's very easy to see what's happening, right? Why is this choppy? Why is this choppy? Do you know why it's choppy? You need a new mic, brother. I have the volume all the way up to hear the stream. Really wait. Testing. All right, I'll try to get closer to my laptop. My bad. It's because I'm not at the desk right now. I'm not at the. Yeah, I'm at my girl's house right now. Let me get closer to the laptop. All right, as I was saying here, the reason this is choppy is because, well, a lack of fair value gaps signals consolidations, right? Because fair value gaps are always going to be present in expansion conditions and in expansive profiles. When we consolidate, there is no expansion. We just move sideways. Also, big wicks, big rejections to both sides of the market, big wicks to the upside, big wicks to the downside, just no intention to actually follow through on anything. So it just leads to this nasty consolidation, which I would stop analyzing right here. But just to show you what the daily looks like, the daily just looks even more chopped, right? So you don't have to spend too much time analyzing this. I'm not even going to bother determining what is going to happen next on AU because it's chopped. There are better assets like Euro and GBP who are much more directional on a higher time frame basis and aren't stuck in this nasty range. I believe NU is in the same exact spot, just super chopped, nothing very interesting. just no follow through anywhere. It's just been stuck in this range. So I have not looked at AU and NU in a while. And same thing for UCAD right here. It's just been chopping at this range right here. We have this monthly fair value gap up here that we might potentially draw towards too. But we have a bearish outlook on the dollar. So does it make sense to look for UCAD longs? No. And this fair value gap seemingly just originated out of this chop. So it's just not something I'd be too interested in, considering I also have a bearish outlook on the dollar. And then you guys know how I feel about USD CHF pair specifically. Not this USD CHF. Swiss franc as a currency. I've never been a fan of it. Although on a monthly, this doesn't look bad. Monthly IRR to euro. What is the weekly saying? Well, now we start to get conflicting ideas. Look at this. We have a weekly IRR to euro. So this is trapped order flow. All this right here, this is trapped order flow. This is where price is stuck in between a higher time frame discount array and a higher time frame premium array. So it's trapped. There's two opposing ideas. There's two opposing arguments. No side is in clear control and clear power. Think of it as being stuck in a cage. And so you get this very indecisive weekly candle last week, not knowing what the hell it's going to do. Going down to the daily, you get price action like this, not knowing what it's going to do because it's trapped between two higher time frame premium and discount arrays. There is no clear side in power. So you get this nasty price action like this. This daily fair value gap is very avoidable. All of this price action is very avoidable. That's a great example of trapped order flow right there. Moving along. Sir Pete, just to say a big thank you. Your order flow plus candlestick logic method helped understanding bias. For sure, man. I think it appreciate that. I think it's the easiest way to view price, and that's all it does. You literally just using those two concepts, order flow and candlestick logic, you can find the bias, you can find the direction, you can predict major financial markets with literally just those two concepts. It's pretty mind-blowing. It's very simple, but it is, you can use that on any chart you look at. Order flow and candlestick logic. It can be that simple. USD JPY, it's chopped. I had that box because we're just in that consolidation range. So pretty much I'm not interested in trading anything inside of this range. It has shown no respect to bearish fair value gaps to follow through. Bullish fair value gaps are not following through. Now we have this bearish fair value gap right here. What do we know about consolidation conditions? When bullish and bearish fair value gaps don't follow through, as in right here, we didn't get a bearish fair value gap lower. Right here, we didn't get a bullish fair value gap higher. Chops ensue, right? Because there's no premium array being respected. There's no discount array being respected. So what's being respected? How can we determine trend and direction if nothing is being respected? If there's no premium and discount arrays being respected, we don't have a trend. So that if we don't have a trend, we have a chop. And if we have chop, we have low probability conditions. And when we have low probability conditions, we don't have trades. So I wouldn't even look at this market any deeper than this right here on the monthly basis. It's mega chopped. And then weekly, you just see. Look at all this rejection, all these wicks all over the place. All over the place. This is abysmal stuff. I would not want to be trading. I'm sure you can see why the daily is also just as gross. So that's USD JPY. So far, Euro, GU are the only clean majors. Got it? Let's move on to oil, which again, this is also going to be something very choppy. I don't even know why I still have it here. I haven't traded it in so long. But you will notice on a monthly basis, we have just been stuck in this huge consolidation range. Huge consolidation range. Monthly fair value gaps not being bullish fair value gaps not being respected. Bearish fair value gap being created. This would be trapped order flow right here. And then we just don't respect anything. We don't create new fair value gaps higher, new fair value gaps lower. So if fair value gaps we have not been able to trust fair value gaps in recent history here. What makes us so confident that this one is going to work? What's most likely going to happen is chop, because fair value gaps inside of consolidations, fair value gaps inside of chop, inside of ranges are very low probability. Fair value gaps in ranges don't work. You want to view it through that lens. They don't work. In consolidations, the highest probability conditions and the highest probability trades will occur at the external ranges. And then we might likely continue chopping, or we might actually break out of it. But it is a crucial tipping point as to what's going to continue happening here. All of this happening, all this garbage in here, low probability. So right off the bat, I'm already not interested in oil on a monthly basis, and that's definitely saying something. If we go to the monthly, or sorry, the weekly, again, it's just chopped in this range, man. There's really nothing. It's in the middle of this chop. This is probably the lowest probability area to trade inside of a range, the equilibrium of a consolidation. So this right here, none of this is interesting. I don't want to look at this anymore. Let's continue moving on to gold. Another chopped chart, unfortunately. I mean, let's try to analyze gold a little deeper here, though. If we look at the monthly, what are we doing? We're respecting previous month's high. Okay, meaning if we do want to have a target, it would be previous month's low. I've already spoken on why gold has been nasty. We've literally, if you take a look at the candles right here, we take a look at April. April's candle formed this huge indecisiveness. Then we have the same thing happening in May, and we don't even take out the previous month's high or low. And then June comes along. We still don't take out any sort of previous month's high or low. Then July comes along. We still don't take out any previous month's high and low. So we've just been funneling into this tight little consolidation and just having no direction. This is disgusting. We're finally over here in August. We finally took a previous month's high right here. We could potentially draw towards this previous month's low. That's what I would be looking at on gold, although this is still lower probability trading conditions in general, as you are just trading in this overall sideways movement. Lower probability, of course, than GU and Euro, who are actually directional with fair value gaps. Let's go to 1 second, guys. 1 second, I gotta mute real quick. Okay, we're back. I don't know if you heard a loud ass man in the background. That's my girlfriend's dead. Anyways, as I was saying here, go back to gold. I would say this weekly swing low right here would be my draw on liquidity. It's the closest PD area that we can draw towards to. We do have bearish daily order flow after that previous month's high sweep, as you can see right here, out by the indicator. Daily bearish for value gap right here. My eyes would go down towards that previous month's low. We don't have a daily fair value gap created off of that. I'm going to take a look at the 4 hours, see if there's any 4 hour fair value gaps lower here. We do have this one. I would like to see us create a new 4 hour fair value gap lower. If you want, that can be interesting for potential shorts down to previous month's low. Displacing through that previous day's low, creating a fair value area right here in the 4 hour. That wouldn't be too bad. That would be my idea on gold right there. Going on to silver. What is silver doing? I think silver is also mega chopped. If we take a look at silver, we have this monthly fair value gap below, but it appears that we already want to push higher based on how that monthly is looking. Because if we go to the weekly, we'll see that price has attempted, we can say attempted, to move higher off of this weekly fair value gap, off of this weekly area fair value right here, this weekly order block. It's trying to. Although right here, this is where things get funky, because this next candle, they didn't continue expanding higher. It sort of just consolidated right here, and that's very suspicious. If you go to the daily, what you'll notice is that we've sort of lost all intention to continue pushing higher. This right here just starts giving me consolidation vibes. Bad price action is what happens right here, right? Because we had this daily bullish for value gap. If we wanted to push higher, and if we had true intention to go higher, we would have respected these daily for value gaps. But we didn't. What happened is we created daily bearish for value gaps. Okay, well, we disrespected the daily bearish for value gap, and we tried one more time to push higher. And we didn't. We just came right back down. All this bearish intention seemingly came out of nowhere. And now we're more so just 50-50 right here. There is no clear sighting control. And there's just a whole lot going on here as well. We have this monthly fair value gap down below that we never retrace into. We have daily bullish fair value gaps not getting respected. Even daily bearish fair value gaps not being respected. Just a whole lot of uncertainty and PD arrays not following through as we expected them to. And when we have PD arrays not being respected as we would expect them to, that is when consolidations can potentially begin. And this right here is where your low probability conditions would ensue. So I'm not very interested at all in silver right here. I don't have too clear of a read, so it's not something I would be interested in this week. I have no read on where this next weekly candle might go. So not too clear on that. As for Bitcoin, the Bitcoin right here, we are trading at all-time highs. We are respecting this previous month's high right there. We have a monthly fair value gap right here. We are in monthly bullish order flow. Again, indicator clearly shows you that right here, marking out everything you need. Going on down to the weekly, we'll see that this is that previous month's high that we swept. Also just a very potent weekly buy-side liquidity right here that we are sweeping. And this candle will close in 2 hours, so I doubt that anything major changes right here, and it's likely we close like this. So now where my eyes head towards to on Bitcoin is, well, if we're respecting a premium array in the form of this weekly swing high, we're likely going to seek a discount array, because that's all price does. Respect a discount array to seek a premium array, or respect a premium array to seek a discount array, offer for value or seek liquidity. So my eyes go down towards this weekly low. Now, what happens after that, we'll have to see, because if we look at the overall trend, we have been extremely bullish, okay? And what could potentially happen is we might want to sweep that low to continue pushing higher, potentially some weekly pivot context. Or we might just consolidate for 14 days and create a monthly fair value gap right here. Let's not forget what's this little guy right here in 14 days. We might just mess around and create a bullish fair value gap right here that we use later on to move higher off of. So the immediate idea on Bitcoin is shorts down towards that low right here. Let's fix this. We don't need that right now. But I am pretty confident this is going to be 4-hour bearish order flow, which it is. So as you can see, the 4-hour right here went from a bullish state to a bearish state, and now creating 4-hour bearish fair value gap. So we'll see how that pans out. Again, this isn't something I'm going to trade. That's just the bias on Bitcoin. In all honesty, I would even just wait. I would just be waiting until the bullish scenario comes along, because you're counter trend trading something that has been just absolutely ripping. And what tends to happen with Bitcoin is that it'll rip and just have these periods of consolidation, which is why even with that bearish idea I just outlined, it wouldn't be something I'd be too keen on trading anyways, because Bitcoin loves to rip and then it loves to consolidate and stair step and then just rip again. If we just zoom out, you will notice what I'm talking about. We like to rip, we like to consolidate and do a whole lot of nothing. Rip, consolidate, and do a whole lot of nothing. Rip, consolidate, and do a whole lot of nothing. We just ripped. Now we're doing that consolidation part. We might easily just rip again for no reason. We may not even want to retrace down here, just because Bitcoin can do that. We may literally just consolidate. But on a candlestick logic basis, that's what it's telling me. But on a personal basis, on an intuitive basis, based on also just the personality of this asset, incorporating that analysis into that, it's not something I'd be interested in trading, just because I know how Bitcoin loves to behave. It loves to do this, it loves to stair step, and it loves to consolidate after big expansions. So looking for counter trend shorts right here, and trying to be all, oh, let's go trade down and I'll catch the up, I'll trade the reversal and I'll catch the top of this. It's not going to work on Bitcoin. Bitcoin likes to do this right here and mess everyone up. So it's better if you just wait for the retracement, wait for the reversal, and just capture the trend continuing higher. You know, catch these moves over here, not these, or the retracements down. If that makes sense. All right. That's Bitcoin. Ethereum is looking a bit stronger, dare I say here. We actually do have this all-time high right here that we have not tapped, and we are looking to go for here. We have a monthly fair value gap getting created in 14 days. If you go to the weekly, we have a weekly fair value gap here actually in 2 hours. If there's a daily fair value gap in this leg, we might just want to push higher off of that. Let's see how that has been. Okay, well, we do have a daily, but it has not really been respected at all. 1, 2, 3. This is 4 candles already trading inside the fair value gap. I don't like that. The more candles that trade in fair value gap and the longer time we spend in a fair value gap, the weaker and lower probability we should view that gap, right? You guys know the rules. I like to see it either reject on the first candle or the second, right? The 2 candle rejection. Anything more than that, it starts to become a lower probability gap, or we may just consolidate or just full on disrespect it and move lower. So that is the way I view Ethereum. We're not respecting this daily gap at all. This is actually, I'm getting the warning on the yellow sign. We may have already mitigated it on the lower time frame. Let me just double check that. I don't believe we did. If it still shows up, yeah, okay, it still showed up. So we didn't mitigate the ERO. That's a little feature the order flow indicator has, because on certain examples, when you have this yellow box around it, what says tooltip, when it's a candle like this, you don't know if price came in, swept IRL, and then closed back in like this, meaning the context would have already been completed. Or if price first went higher and then came into the ERO for the first time, leaving that ERO unmitigated. But in this case, it was the second thing I said. So it's still that valid ERO. It's still daily IRO to ERO, except now we're just incorporating the fact that we're consolidating inside of it, and it just becomes a lot lower probability. Not something too interesting here. We may just seek that weekly. That would be my idea on Ethereum there. And finally, let's take a look at our indices right here. Let me take a sip of water. 1 second. All right, chat. All right, so looking at indices right here, we are trading at obviously all-time highs. We have this monthly fair value gap down below price, but currently looks like we are just pushing and pushing and pushing. There is really no reason right now to be bearish. There is no bearish arguments right here. Other maybe than this slight one right here, where we did not close fully and decisively above this weekly swing point. But taking a look at the daily, we are still very bullish. I would say there is no reason for me to look for potential tops right here. And just look for any reason, more so look for any reason where we can potentially continue pushing higher from. So on ES right here, my focus would go to this daily swing point right here. Because remember, if we are in bullish conditions and if we are in bullish order flow, any move below an old swing low should just be viewed as a potential stop hunt to continue pushing lower. When I'm viewing this as a potential, market structure shift, let's look for short, we first have to observe the reaction we get over here. If we start to or if we respect it and sweep it, get large lower wicks here, quick reaction back into the range, we can look for the reversal back up to this high. Right, this would just be daily pivot context right here. This is actually a great example of daily pivot context, where we respected this daily fair value gap, failed to create a new fair value gap higher. If we still want to push higher, we can use the swing low that was created inside of the fair value gap, which failed to expand higher. So this level right here, this previous day's low, this daily swing point is something I will be watching closely going into next week. That is very interesting to me right here. So this right here could be a potential context area. This whole area right here is a potential context area. If we do sweep that low, we can look for trades inside of this little area from this swing point to this swing point, giving us a boundary to operate within, right? Because the only areas we're ever looking for trades within are within these boundaries, right? So the boundary could be pivot context right here, or the boundary can be an IRL to ERO like we had over here. This could be another boundary we look for trade inside of, and then this would have just been your IRO to ERO, and now you're looking for trades from this fair value gap to this swing high, right? This boundary right here. So that's the idea on ES. I'll be closely monitoring that. We do have 4-hour order flow pointing lower, so it does line up with wanting to reach for this previous day's low right here, which is this low. So we'll see. I think this could be quite interesting if we do something like that. If we don't, if we start to run that low, then I'll have to just start looking at potential bearish targets, bearish discount arrays. So this previous week's low does become a potential area to look at. And if we're really bearish and we also run that, then this monthly fair value gap down below becomes an area of interest. This swing low as well, this fair value gap down below, that does become interesting. Again, it's all reacting and adapting, but we're just getting ready for any sort of scenario and not caring which one we get. I could care less if we move higher here right now. I wouldn't be butthurt if we don't. I would totally be fair game if we start getting bearish daily order flow pointing lower towards this monthly gap and then looking to short down there. I'm totally fine and I'm welcome either outcome, either scenario. Always reacting and adapting. All right, so whatever happens, happens. We will trade it. So that's ES. Let's go to the NASDAQ here. Starting from the top, same idea pretty much. We have this monthly order flow, bullish order flow right here. We have this monthly fair value gap created down below price. Let's go to the weekly. On a weekly basis, again, same thing. We have respected this weekly swing high right here. So this weekly swing low can be a potential, previous week's low can be a potential level as well. I'm actually going to mark that, although the indicator should mark that already, the previous week's low. Yeah, there you go. So that's why I love the indicator. It'll automatically do that for you. It's already marked up. Should be marked up there already. The navigator right here. So yeah, there we go. Beautiful. So over here on a daily basis, again, this is previous month's high. Just keep an eye on previous day's low right here. See how price reacts out of that. That can be a potential level we want to utilize to continue pushing higher. We don't really have a swing point here. We'll keep an eye on that. We'll keep an eye on the previous week's low over here with the indices. The previous day's low. Again, the indicator already marked that out here. Since we are bullish, this previous day's low does become a potential area we can look for longs from. If we do respect it, same idea. This order block. This is actually an order block right here. So we'll see what happens. Maybe 1 or 2 candle rejection off of that. But I am bullish on indices. There's no reason to be bearish right here unless we really, honestly, just start getting daily fair value gaps lower and respecting all these daily discount arrays. So we'll see. We'll see what happens here. Maintaining that bullish bias here. YM. So YM actually had that SMT right here with that monthly fair value gap on NASDAQ and ES, which is why I was already looking long, because YM came into that. So that's very valid now for ES and NASDAQ to already want to push higher, because we had a divergence at a higher time frame POI. So ES and NASDAQ pretty much had that green light to not even need to come into that and already look higher, because YM had that right here. So YM is just pushing higher off of that. We completed this weekly pivot context. Let me just mark out some of the arrays we can potentially target on YM here. Do we have any daily bullish fair value gaps? We do. We have this daily for value gap down here. I wouldn't consider this a breakaway gap anymore, again, because we have respected a premium array and given it a catalyst. You can call this a catalyst to retrace, right? This is just ERL to IRL. External range liquidity to internal range liquidity, where we're respecting a swing high right here. Potentially draw towards the IRL. And then from here, IRL to ERL potentially. Let me take a look at the 4 hour. If we have 4 hour bullish order flow, that would be very telling, which we do right here. See, we swept that swing high and we flipped order flow from a bullish state to bearish state on the 4 hour. So I would expect this to want to continue pushing lower down towards the daily, and then we could potentially move higher off of that daily IRL to ERL right there. That's not a bad, that's a pretty good spot, Gabriel. That LRL right here, these series of failure swings, that is pretty interesting. And again, we are currently respecting this order block right here, so we can actually, if we do start getting this 4 hour for value gap higher right here, we just start displacing higher right here, that wouldn't be bad either. And NASDAQ can just run higher off of that. We'll see how that wakes up into the AM session. But even that wouldn't be bad. And yes, I do like those failure swings right here. Really nice. This is looking like a bunch of engineered liquidity right here. Looking juicy. Great spot. So that's the idea of indices. It's pretty simple. Just bullish. Just bullish. Again, I don't really trade YM. I just use it for SMT. So that's why I utilize it here on the list. But ES and NASDAQ, very clear bullish ideas, I think. Very clear. And that's about it. We'll see how these wake up. But anyways, guys, yes, that's the forecast. How long was this? How long was this one? Like an hour, right? This one was an hour and 7 minutes, all right? Not bad, guys. I think that is all. Let me take a look at chat real quick. Can you share your candle colors? Yes, they are also inside of my Discord. You can just literally look at it there. But these are the candle colors. They're inside my Discord. The borders is green, black, wicks are black. And then the canvas is just it's just white. It's just a solid white. So yeah. Appreciate it, Kimo. Thanks for tuning in, brother. Someone mentioned something about GBP CAD. I'm not gonna look too deep into these right here, but I've really been focusing a lot. Honestly, if you haven't seen me doing a lot of swinging or analyzing the crosses lately, it's because I've been putting a lot more of my focus into intraday trading indices. And I've been really enjoying that. You guys have seen me. I've been doing a little more scalping and focusing a lot on just ES and NASDAQ. Because in all honesty, I think there is literally opportunities daily on those two assets. Daily. They're the best moving assets in the world, in my opinion here. I don't even think that's too hot of a take. Absolutely. So what did you mention you want to take a look at here? GBCAD? Let's see. But yeah, I haven't been looking at indices, crosses too much lately. Also, crosses have been really bad this year. Like, really bad. Swings have been really rough since a lot of swinging, for me, depends on having that large watch list with lots of opportunities. But when 70% of that watch list has been ass all year, it becomes really hard to find a lot of opportunities because the majors have just been stinking it up, man. They have been really stinky across the board, so it's been rough. So I have taken a more focus into indices trading, and that has been really nice. I really like that. So what did you say about GBP CAD? What do you think about GCAD and GNZD? It seems like there's daily context on both. So if we take a look at the monthly, we have been trending higher right here. Previous month's low was swept right here. All right. Weekly bullish order flow, monthly bullish order flow, weekly bullish order flow, daily bullish order flow. My concern is that this is now acting as a breakaway gap, and we are much closer towards this previous month's high that we may just want to already draw towards there. And a retracement down lower may not be too favorable. We have this 4-hour bullish for value gap we might want to already move higher from. Obviously, the bias would be bullish right here. But what I just don't like how we've already made majority of the move right here. We just don't retrace. It's that strong. This is some trends are almost too strong for our own good, because if they're too strong, we're not going to get the retracement into the fair value gap. And if there's no retracement into the fair value gap, well, then there's no opportunity for us. So we want to see strong trends, but we also want to see some form of retracement in order to get involved. This is just like like you can't involve yourself in this when it's just straight up. It's just expansion candle after expansion candle after expansion candle after expansion candle. It gets hard to play something like this. I mean, just look at this on the 4-hour. It's literally vertical, dude. So yeah, I think we already just reached for these targets rather than go down into there. So for me, this would be something that's just too strong to even look at. GB EuroCAD over here was really nice off of this daily IRA to Euro. I know someone took this 1-hour impulse shift in the chat. Someone definitely took that. I would even say EuroCAD looks better right here. But at the same time, we just swept major liquidity right here. The higher probability trades would be trading up towards that. Now that we've completed that, it's like we don't have that magnet pushing us from above to target it. Like this is major liquidity right here. I mean, we do have these relatively equal highs right here. The next potential draw. That's actually not too bad. It's like right there. EuroCAD does look a little better. But EuroCAD, what it might do potentially, got to be careful if you form a weekly right here. Want to use this area for value, and then use the weekly for value gap next week to push higher. So you'd have to see, once this daily for value gap gets created, do we start to mess around in the daily, and at the slightest sign of a potential consolidation, the lack of a follow through, the weekly for value gap starts to become a bigger possibility for being what price wants to wait on. So you just have to observe price right here. EuroCAD does look a little more interesting to me than GBP CAD, based on just where it is. Higher time frame wise, it just looks like it's a little stronger, and there's more clear draws right here. Lots of clean fair value areas to rely on as support levels. So yeah, that is my view on that. The JPYs have been, how have they been? Yeah, not very interesting. Yeah, no, I think we already completed this weekly then. If this happened in one candle, right? Because that's not what's showing up. Or did it? I believe it did. Not really interesting. Again, I'm not really looking at swinging much lately. But yeah, guys, that is the forecast. I hope you learned something. I think we went very in depth today. I think there was we were very clear on the process. I was a lot more clear in terms of how you start from point A to point B. So if this is your first time, I think you learned a lot. Right? We went through the very basics here with how to find bias using order flow and candlestick logic. We went through a whole bunch of pairs. So hopefully that was insightful. I do this every single week, every single Sunday right here on YouTube. So if this is your first time, see you on the next one. And if you need any more help, I will be inside of the Discord as always. And let's have a great trading week, guys. Stay safe and much love. Thanks for tuning in again. Peace out.